Hello and welcome back to Freedom English channel. This is Sanaram. And a special welcome to Stock Market Series Part 4. Part 1, we understood the basics of stock market. Part 2, we understood the terminologies. Part 3, we actually explored different ways to select the right companies to invest. And in Part 4, we are going to discuss about the mistakes which are commonly committed by the investors. And why are we going to do that? Because when we know that this is a mistake, we can actually save our time by not doing it. And of course, we can take better decisions. So in this video, we are going to cover 7 mistakes which none of the investors should make. And before I jump into the video, if you have not subscribed to our channel, go ahead, subscribe our channel, click the bell icon. This is again Sanaram welcoming you to Stock Market Series. And as I mentioned before, we are going to discuss about the mistakes here. But before that, I have given the link for Part 1, Part 2, Part 3 in the description. If you have missed those episodes, do watch them after watching this. The first mistake which an investor should not commit is investing in stock market without proper knowledge and planning. Why should no one invest in stock market without proper knowledge and planning is because we will hear from everywhere that I invested in stock market and I got good returns. But trust me, when someone invests in stock market and has actually lost that money, they will keep quiet. The news will not come out. But if they make a little bit of return, they will shout and tell that I made good amount of returns. What happens here? We get influenced. So we are getting influenced by someone who has got a little bit of returns from stock market. But we lack planning and knowledge. And when we invest money in stock market without proper planning and knowledge, we actually tend to lose it. I'll give you a small example here. Let us assume John is earning 25,000 and 30% of it should be invested. So 30% of 25,000 is 7,500. John has a neighbor who came to John and said that he has invested in stock market and has got good amount of returns. So now John wants to invest that 7,500 in stock market. So basically, if John does that without having proper knowledge and planning, he will lose it. But now John wants to do it. So every month, John is actually investing 7,500 in stock market. But how can John wisely invest this? I'll show it to you in a table. So John can actually invest 3,000 in stocks, 2,000 in PPF, 1,000 in RD, 500 in SIP and 1,000 in health insurance monthly premium. So now you will ask me, you told me that if John invests 7,500 in stock market, he actually will lose it. I'll tell you why he will lose it. 1. John doesn't know how much to invest. John doesn't know where to invest. He doesn't know what all analysis he has to conduct before investing in stock market. So basically, John has no knowledge about stock market. Just because his neighbor told him that he has made good returns, John decided to invest in stock market. And we also understood how wisely John can invest. And one more thing I would like to add here is, when you're doing investment, you should actually diversify it. So 7,500 which John is investing should be diversified. As I mentioned, he gave the list as well. So here, if the stock market crashes, 3,000 is in loss. PPF and the other investments will actually give returns and it can be compensated. But in case if John invests the full 7,500 in stock market itself and he wants to liquidate it, but the stock market crashes, he will have nothing in his hand. So basically, the first mistake any investor should not do when it comes to stock market is investing in stock market without proper planning and knowledge. And all these, diversify your investments. Second mistake is investing in stock market without proper research. Let us assume John now has basic knowledge, which is John knows why would a share price increase or decrease. And he also knows that he has to plan and diversify his investments and he is doing it. But he didn't have time to conduct a research on the stocks or the company in which he is planning to invest. So what he does here, John loves Shah Rukh Khan. Shah Rukh Khan is promoting a product. John sees that. He links it with the company and he says, since I like Shah Rukh Khan and Shah Rukh Khan is promoting this product and this product belongs to this company, I am selecting this company to invest my money. Do you think this is the right way to select a company? You are going to pull in a lot of money there. In case if it goes in loss, you are going to lose lakhs and crores there. So basically, we have seen in part 3 some ways how we can select or shortlist the best companies. So this is not something which we have discussed there. So basically what John should have done here, he should have conducted technical and fundamental analysis before selecting the company. Technical analysis is conducted by traders. So they will see why share price has gone down, why it has gone up, when will it go down, when will it go up. They will foresee, they will have a strategy and they will foresee. And when it comes to fundamental analysis, we will see the complete background of the company, and this is done by the long-term investors. And when you conduct technical and fundamental analysis, you will have a clear picture about the company. So the main thing here is, without research, do not step into stock market. We are pooling in a lot of money. Just because a famous personality is promoting a product doesn't mean that company will get profit and will be in market for long. So you should conduct technical and fundamental analysis before jumping to the stock market. So I will show you a small example here, a screen recording. Have a look at it. I have opened Reliance Industry. So what are the things we should check here? Check the profit, revenue, net profit, returns on equity, which is ROE, promoter holding, share price, is it going up or down? Everything like this should be checked. And if you're comparing two companies, you should compare it thoroughly. So on the whole, when you're planning to invest in a company, when you're selecting a company, remember some ways which we have discussed in part 3 will also work. But still, you should conduct your technical and fundamental analysis and not go with any popular personalities who are promoting a product. Third mistake, never plan to invest in stock market for short term. Let us assume John wants money immediately and he thinks investing in stock market for 1 or 2 years will give him good amount of returns. But basically that is a very wrong assumption, because the amount of returns you will get from stock market just by investing the money for 1 or 2 years is going to be very low. But when you invest for 10 or 20 years, which means long term, you can make tremendous amount of returns. And I'll show you the proof right now. So Bajaj Finance in 2002, one share price was 5.75 INR. In 2005, right after 3 years, it increased to 11 rupees. In 2022, after 17 years, one share price is 7,340. We will do a small calculation here. So John, if has invested 10,000 rupees and bought 2,000 shares in 2002, if he has sold it after 3 years, which is in 2005, 2,000 into 11 is equal to 22,000 would be the returns which he got. But if he has waited for 17 years and sold the same shares, which is 2,000 shares in 2022, approximately I'm taking it as 6,000 per share, is equal to more than 1 crore. Here we are getting a calculation of 1 crore 20 lakhs. See the difference. So now you would have understood, when you're investing in stock market, always opt for long term, because that is the right thing you can do, and that is when you will get more amount of returns. Fourth mistake which the investors should not do is investing in low volume stocks, which means focusing on quantity than quality. I'll give you an example here. Let us assume John has 10,000. John now has decided to invest in stock market. So he checks the prices of the shares. He sees one share is 5,000. Now he calculates, I have 10,000. If I opt for this, I can only buy 2 shares. So I'll say no here. The other one is 10,000 per share. He says no, I will end up getting 1 share and I don't want that. From the other side, he sees 1 share is being sold for 1 rupee. Now he calculates, I have 10,000 rupees. I will buy 10,000 shares using this. Is this the right thing to do? I would say no. Because in stock market, if you hold quality stocks, you can make good amount of returns. Quantity doesn't matter. And in case if you want to invest on low volume stocks, I would request you to conduct proper technical and fundamental analysis before confirming the company. Fifth mistake the investors should not commit is believing in fake news. Social media is something which we all are attached to. John is like us. So he is very much attached with FB, Instagram, YouTube, WhatsApp, and everywhere he sees this advertisement, which states this share or this company ABC is going to be a bumper hit. If you buy these shares, you are going to make a huge amount of returns. It is a bumper for you. This keeps on flashing everywhere. John believes it and invests money in that stock and buys it off. But later it comes out that that has been a fake news. So how does this actually happen? Basically, there are some companies whose share no one buys. So what do? They call the social media person and they say, promote our company, we will pay you. So all the pages on Instagram, all the pages on Facebook, WhatsApp, YouTube are speaking about this specific company whose share no one wants to buy, is now famous because they have paid the social media and asked them to promote. But we as public believe the fake news and buy the share altogether. So basically what happens is many people go and buy these shares thinking that they will make good amount of return. So when the demand increases, price increases. After some time, since this was a fake news, it will come out. When people get to know that this is all fake and whatever they have bought is of no use, they will sell it immediately. So when many people sell their shares together at the same time, demand goes down, prices decreases. Imagine if John understands this in the last minute, prices have really gone down and he wants to sell the share because now he has realized it's a fake news, he will face loss. So basically, do not believe in social media just like that. Again, I'm stressing it here, do your analysis, understand and then invest. And do you know what is the best time to buy stocks? When the stock market crashes, you should buy stocks. Ask me why. Normally, stock market from down goes up, from up comes down. So, when the stock market crashes, the prices are low. Pay little, get the shares, and when again it reaches the high, sell it and make good returns. So what is the best time to buy stocks? When the stock market crashes. Sixth mistake which we should not commit as an investor in stock market is getting panicked and selling our stocks when the stock market crashes. Before explaining this, I will show you a screen recording and then I'll tell you why you should not panic when the stock market crashes and never sell the stocks when the prices are low. See, Sensex. In Jan 2020, it was 41,599.75. March 2020, COVID. It went down. It went till 27,590.75. But in December 2022, it has slowly increased and reached 62,828. Okay, now let me speak about Nifty. Jan 2020, it was 12,256. March 2020, COVID hit, it went down 8,083. December 2022, again it has raised and reached 18,696. I'll give one more example to you. Reliance Industries. Jan 2020, 1,566. March 2020, 1,008. September 2020, 2,201. And December 2022, 2,727. So basically, this also went down when COVID hit. So make sure you don't panic when the stock market crashes. So basically, from this screen recording, what did we understand? We understood when the stock market crashes, it will gradually raise. So normally what happens here is when we see the stock market crashing and we have so much of shares in our hand, we just want to sell it off in whatever price it can go. But we should not do it. We should not panic. We should have the patience. But one thing I would like to stress here is if a share price goes down because of crisis or pandemic, something like COVID or any war, it will gradually raise up. But if the share price has gone down because the company has been caught in a scam or in a fraudulent activity or the product or the service which they are providing is outdated, then the share price will not raise up. So when you are investing in stock market, remember all this. Even if the stock market crashes, do not panic. Wait, if the reason is war, crisis or anything related to this and not to the company's fraudulent activities or scam, you can have patience and gradually see the share prices increasing. So don't sell it when the stock market is down. And I'll tell you one more thing. And don't buy shares when the stock market is at its peak. Why? It is up. It will come down. So do not buy it. You should always buy your shares when the stock market has crashed because slowly it will go up. And the seventh mistake as an investor in stock market which you should always avoid is do not jump into trading directly. Most of us do it. And trust me, in our gang, maybe 10 or 15 people are there, one at least will say, I am into trading. But do you know, 95% of people in India fail when they are doing trading, which means they are not making money out of it. They are failing there. Only 5% have made money out of it. Why is this happening? 1, lack of research. 2, over trading. And 3, they are actually taking recommendation from others, believing them and doing the trading just like that. So you have to understand stock market fully. Learn it completely and then decide what you want to do so your money will be safe. And one more thing, we also say this, I will go to job 9 to 6, let it be there, I'll get my salary from them. On the other side, I will do trading. Trust me, if you're going to jump into trading, you have to be dedicated to it. You cannot do multiple jobs. You will lose your money even in salary and especially in trading. So make sure if you're jumping into trading, you should have a vast knowledge and full time just dedicated to trading. So now I will show you a slide in which I am going to show all the 7 mistakes again. Remember never to commit this when you're planning to invest in stock market. Number 1, never invest in stock market without proper plan and knowledge. Number 2, do not invest in stock market without research. Number 3, never invest for short term. Number 4, Choose quantity over quality, which means no low volume stocks. Number 5, do not believe in fake news. Number 6, don't sell your stocks when stock market is down. Gradually it will raise up, wait. And 7th one, do not directly jump into trading. So why did I actually share the mistakes with you? Because we should learn from others' mistakes. We should not be stubborn and say that I will learn only from my mistake, because we will waste our time. And if you are going to invest money in stock market and say that I will learn only from my mistake, we will lose our money. So let all this not happen. So if you are planning to invest in stock market, never do all these mistakes. And in case if you have not watched our part 1, part 2, part 3, I have given the links in description. And those are the foundations, right from the basics to the terminologies to some ways which can be used to select the best company has been covered in the first 3 episodes. So don't miss those episodes. And thank you so much for watching this episode. I'll catch you in the next. Before that, if you are not subscribed to our channel, go ahead, subscribe our channel. If you like this video, give a thumbs up. And if you believe this will be beneficial for others, please share. And Freedom app should be there on your phone. If you ask me why, I would simply say you need a guide in your life. Everyone needs a guide in their life, and that guide can be our Freedom app. We have n number of courses. I would say 900 plus courses available. Mentors are there. They are going to train you from A to Z, be it farming, business or personal finance. You can select your interest and develop yourself just by seeing the mentors and listening to them, and change your life just the way you want it to be. And with this note, I finish my video. I'll catch you again in the next part. Until then, you guys take care and bye-bye.